Welcome to the Deep Dive. Today we're taking a look at something really fascinating. The latest moves from investors who, well, consistently seem to beat the market. What if you could actually get a peek, over the shoulders of these top performers? What might you learn? So our mission here is to unpack the source material we've got. Investor reports, company announcements, some analyst notes, basically, trying to pull out those valuable bits of knowledge. And today, specifically, we're zeroing in on the top 1% of investors at Mirai Asset Securities, ranked by the returns last month and what they were buying. This data is as of July 9th, 2025, around 11:00 a.m.
Right. And just to be clear, these aren't, just average traders. These are the folks with a really strong track record, the super experts, as the source calls them. But it is important, like the source material points out, this shows what they did. It's information. It's not investment advice or any guarantee of future results. Still, it's a pretty unique window.
Absolutely. A unique window. And what we found were, well, maybe three surprising top picks, especially when you look at the recent news. Okay, let's dig into this. So, July 9th, 11 a.m., the three most bought stocks by these high-performing investors: Samsung Electronics, Mirai Asset Securities itself, and Pharma Research. And yeah, like you said, some of these raise eyebrows immediately given the headlines flying around.
Exactly. And it's key to remember this context. These are intraday moves as of 11 a.m. from this specific group of successful traders at Mirai Asset. So it's not the whole market. It's a snapshot of where some very sharp people were putting their money at that particular moment.
Okay, let's start with the biggest one, number one buy, Samsung Electronics. Now, this feels like, well, it feels like a direct contradiction, doesn't it? Because Samsung had just announced what lots of people were calling an earnings shock. This is where things get really interesting, seeing how these investors think differently.
Right. The earnings shock was pretty significant. Their provisional operating profit for Q2 2025, they estimated it at 4.6 trillion Korean won, which is what, roughly 3.4 billion US dollars. And that's a huge drop, 55.9% down from the year before. It was also quite a bit lower than the forecast. The average analyst forecast was closer to 6.2 trillion won, so a definite miss.
Yeah.
And the main reason they pointed to was sluggishness in semiconductors, specifically something about pre-processing, high bandwidth memory, HBM inventory value. They basically had to book a loss on the value of that HBM inventory, and that hit the bottom line hard.
HBM, right? That's the really high performance memory needed for AI, isn't it?
Exactly. And if you look at the competition, like SK Hynix, they've been riding that AI wave, benefiting from HBM demand. But Samsung, well, the source mentions, they're currently struggling to supply NVIDIA a huge customer with their latest generation, the HBM3 12-layer chips. That's the top-tier stuff. A Samsung official even mentioned these one-off costs, like those inventory valuation reserves, dragging down the memory business performance.
Okay, so you've got missed earnings, semiconductor sluggishness, issues supplying the latest HBM. With all that difficult news swirling around, why on earth were these super experts buying so heavily? What were they seeing?
That really is the million-dollar question, isn't it? The counter-narrative, mostly coming from the domestic securities firms in Korea, was actually quite positive. The general feeling was, okay, the worst period is probably over. They see Q2 as the bottom.
The classic bottom fishing the bad news.
Kind of, yeah. And then right after the earnings announcement, Samsung came out with an additional share repurchase plan, a big one, 3.9 trillion won, about 2.9 billion US dollars.
Okay, that's a strong signal from management. Confidence, maybe, and support for the stock price.
Definitely. And the analysts seem to agree. Chae-min Suk from Korea Investment and Securities, she pointed out that canceling shares actually lowers the valuation burden, increases the book value per share, the BPS. And Kim Woon-ho at IBK Investment and Securities, he expects performance to actually improve from Q2 onwards. He thinks the HBM situation won't get worse, and they'll start benefiting from prices rebounding in regular DRAM too.
So, connecting the dots. These top investors were maybe looking past the immediate shock, seeing the buyback, hearing the analysts say worst is over, and betting on that recovery.
Precisely. It looks like a calculated bet that the negative headlines were temporary and the company's actions plus underlying trends pointed towards an upcoming improvement. They were buying the dip, but with specific reasons.
Fascinating. Okay, from a tech giant navigating choppy waters, let's shift gears. The number two pick was Mirai Asset Securities itself. And what's really interesting here, the stock jumped quite a bit, even though Korea Investment and Securities had just put out a neutral rating on it.
Yeah, that is interesting. The stock was trading at 22,251, which is about 16.50 US dollars, and it leaped 7.49% just that morning by 11 a.m. on July 9th. And the driver wasn't earnings or anything company-specific like that. It was news from the day before, July 8th. Apparently, members of the Democratic Party's KOSPI 5000 Special Committee, that's the committee focused on boosting the Korean stock market index, KOSPI, towards a 5,000 level target. They're preparing a bill.
A bill about what?
About mandatory treasury stock cancellation, forcing companies to buy back their shares and then actually cancel them, retire them permanently, which, directly boosts value for remaining shareholders.
Oh, okay. So not about Mirai Asset's performance, but about a potential market-wide rule change that could benefit shareholders of many companies, including Mirai Asset.
Exactly. It's a policy play. Han Ji-young from Kiwoom Securities noted that the government and the ruling party seem to be working on a broader plan to vitalize the stock market. This mandatory cancellation is part of it, alongside things like expanded concentrated voting, maybe even support for the defense sector. So these investors weren't necessarily betting on Mirai Asset's fundamental outlook changing overnight. They were betting on this potential legislative tailwind lifting the stock and perhaps the whole market. A policy arbitrage move, really.
Right, positioning ahead of potential regulation.
Yeah.
Very different driver than Samsung. Okay, what about number 3? Pharma Research. Equally dramatic context here, it seems. The company had just canceled a previously announced plan for a human spin-off, yet it was a top buy. What's the story there?
Yeah, another interesting one. They announced this spin-off plan back on June 13th, but then pretty quickly decided to withdraw it. Why? Well, according to their own statements, they listened to feedback. Concerns were raised about governance structure changes, potential harm to shareholder value, and maybe not enough communication beforehand. A company official literally said they carefully accepted these opinions and reevaluated.
So they listened to their shareholders and reversed course.
Seems like it. And the market reaction, very positive. The stock jumped over 13% the day before, right after they announced the withdrawal.
Wow. Okay, so investors like that they listened.
It certainly looks that way. It signals responsiveness, maybe. And despite canceling the spinoff, the company says its core strategy is still on track. They're focusing on growing their global aesthetics business, things for cosmetic procedures in the U.S., Europe, Japan, plus strengthening investments and looking at potential M&A.
So the takeaway here seems to be about management responsiveness. The market rewarding a company for listening and maybe avoiding a controversial move.
I think that's a fair reading. It's like the market put a premium on that pivot, rewarding the agility and willingness to change course based on stakeholder feedback, even if it meant scrapping a big plan.
Okay, so we've covered the top 3 buys. Samsung, Mirai Asset, Pharma Research. Different stories for each. What else were these top investors doing? What about the sell side?
Good question. Looking at the other side, the top sells on July 9th included names like Hanwha Solutions, Doosan Enerbility, and LGC Chimbio. But here's where it gets really fascinating and shows just how dynamic this is. Mirai Asset Securities and Pharma Research, the number 2 and 3 buys on July 9th.
Yeah.
They were actually among the top sells just the day before on July 8th.
Whoa, wait. So they flipped completely from selling hard one day to buying hard the next.
Exactly. It highlights this incredible responsiveness. For Mirai Asset, maybe the sell-off on the 8th was profit-taking or reacting to something else entirely. Then the news about the potential mandatory cancellation bill hit, and bang, complete reversal, becomes a top buy. And for Pharma Research, the spinoff was likely controversial. Investors might have been selling because of that plan. Then the company withdraws it. Instant catalyst turns into a strong buy signal for those same investors.
That's incredibly fast. It really shows they aren't just holding long-term. They're reacting almost instantly to new, decisive information that changes the value proposition.
It seems so. When a catalyst emerges that provides a clearer path to value or removes a perceived obstacle, they can pivot extremely quickly.
What a journey through the minds, or at least the actions, of these high-performing investors. So we saw Samsung looking past the bad earnings for a longer-term recovery play.
And Mirai Asset riding a wave of potential policy change.
In Pharma Research, getting rewarded for listening to its shareholders and changing direction.
Yeah, I think what we've sort of distilled here is that these top investors, they often look beyond just the headlines. They factor in potential big picture policy shifts, things that can redefine value, and they seem to really value, transparency and responsiveness from the companies they invest in. It's about applying that knowledge in real time.
Right. Knowledge is key. So as you think about all these fast strategic moves, maybe consider what factors you prioritize when you look at a company. Is it just the latest quarterly numbers? Or is that longer-term vision? Or maybe, like we saw with Pharma Research, it's about how agile and responsive a company is to the people who matter, its stakeholders. Something to think about.